Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. It's your boy, Larry Jones. I'm still traveling and trading, but I want to keep you guys abreast at what's going on. We have a lot going on. We're going to talk about Jamie Dimon, right, from JP Morgan Bank, what he just said. We also going to talk, we're going to take a look at where crypto is headed, according to somebody whose pay grade is much higher than mine, all right? So, but before we do that, we know that today is Moomoo Monday. Make sure you click the link below. Let's keep it going, all right? We'll talk about that at the end. Let's talk about what Jamie Dimon said. Hit that like, subscribe, and notification bell. Jamie Dimon of JP Morgan, or JP Morgan Chase, he said that he sees a recession coming in 6 to 9 months. 6 to 9 months is what he said, right? I'll pull the article up, so don't quote me on this. But that's what he says he sees coming. For those of you that's been rolling with me, we already know that we are already in a recession. But the importance of this is that here you have one of the largest banks. He knows more about data than I do in some of these and all of these talking heads on TV. Because he has the bank deposits, he got the real receipts. He knows how much debt that we are in as Americans. He has all of this data. And so a lot of people, listen to Jamie Dimon. I'm not a big fan of his because, he was down in crypto, and we all know that JP Morgan is getting into crypto, right? So that's a whole nother story. We'll talk about that down the road. But he has the data, and I just remembered something my dad taught me is don't throw the baby out with the bathwater. The man still has information that we need. Now, is that fear? You say, hey Larry, you've been talking about a lot about the recession. Are you fear mongering? No, we want to have a plan. We want to be prepared, because the truth of the matter is we're going to make more money out of this up and coming hard recession than we ever did. I made more money in the recession of 2007 to 10. Some people call it 2008 recession, but actually the recession lasted from 2007 to 2009. Let's get that correct, right? I made more money. The only regret I have is I didn't go in deeper and harder with more money. While people were fleeing the stock market, I should have been buying more fear, but I did. I just didn't have what I have now. I didn't have the knowledge, and I didn't have the cash. This time I have the cash. For those of you that's been following me, what we've been doing, we've been cashing up, right? So that's what I wanted to talk about, Jamie Dimon. I'm gonna post the article. You read the entire article for yourself. Let's keep it moving. Now let's go to this video that I want you guys to hear to the end, because it's very, very important.
Whoever is the president in 24 is going to be dealing with debt dynamics that are so dire. And so
so dire that this is the 1970s?
No, so dire that we're going to have fiscal retrenchment. And that fiscal retrenchment means that if we don't have fiscal retrenchment, then everything that we spent, if you think about the teens, which was all about suppressing yields, right? Mm-hmm. I think the 20s will be just the opposite. I mean, higher term premiums in bond markets, higher term premiums in stock markets. It'll be just the opposite of what we experienced the last decade. So in a time when there's too much money, which is why we have inflation, and too much fiscal spending, something like crypto, specifically Bitcoin and Ethereum, where there's a finite amount of that will have value at some point, someday. I don't know when that will be, but it will have value. That scarcity.
And the value at a much higher number than where we are today.
Oh, I think so, yeah.
Like?
I would think, so we're probably getting ready to go through the recession playbook, more likely than not. Sometime, I don't know whether it started now or whether it started 2 months ago. You always find out, and you're always surprised about when recession officially starts. But I'm assuming we're going to go into one. There's a specific playbook around that. And
what is that playbook?
well, so that playbook is most recessions last about 300 days from the commencement of it. The stock market's down, say, 10%. The first thing that will happen will be short rates will stop going up and will start going down before the stock market actually bottoms. So that's why you could argue that two-year rates here may have some value, or somewhere through here. And term premium gets put back into a variety of assets, into bond markets, into stock markets, and that's obviously what's happening. When we get into that recession, there will be a point when the Fed stops hiking. There will be a point when it starts to either slow down or even at some point it'll reverse those cuts. And when that happens, you'll probably have a massive rally in a variety of beaten down inflation trades, including crypto.
I want to bring Becky in.
So, Larry, what do you think about that video? I wholeheartedly agree. I think I am not a crypto pumper, a crypto bull. I say pace yourself. We're in an accumulation stage. So I say buy little bits every week. Don't go in all in right now. The same thing with stock, I've been saying. But next year, I believe, will be a better year, even for entry point, right? Now, we know that we cannot time the market, but time in the market always outweighs trying to time the market. But this is good news. The fact that we have this information earlier, the earlier we have this information, the more money we can make. And so what he said about crypto, I wholeheartedly agree. When all of the FUD finishes, when all of these insolvent companies go under and they start to regulate stablecoin, then crypto, because it's a finite amount, will start to explode. And it's going to be led, I don't care how many altcoins there are, over 20,000. It's going to be led with Bitcoin and Ethereum, right? Those, the two main layer ones, right? And so what do? Do we start piling up right now? No. What we do is we start to dollar cost average, because we don't know, we got a ballpark of how long we think crypto winter is going to last. But I'm telling you, for those of you that are mostly cash like I am, this is good news. And for those of you that have been buying the dips, which has been equivalent to a dumpster dive, a prolonged dumpster dive, it's okay. Because all you need is time and cash. So when you get paid, it's simple for those of you that are new to the page. When you get paid, just simply take out a cup of coffee every day. Right? If you're drinking two, take out 2 cups of coffee every day. If you can afford $5 a day, if you can afford $10 a day, you can start that right now. But when the hard recession comes, double up on that $5 a day. Turn $5 into $10, turn 10 into 20. That's when you double down, right? Remember, we are going to buy fear and sell greed. And this is not bad news for me. This is good news, because now we have tools that help us measure, okay? I mentioned that this was Moomoo Monday, and this is all we're doing. We're cashing up at Moomoo right now. For those of you that don't have a Moomoo account, it's gonna be the top link. Go ahead, click that link, download it, and deposit $100. Get the free stock. But I have a team together. You know we got Stocks with Josh on the team. You know we got Keenan. You know we got Mo. You know we got Curry. We have all of these guys, and I'm putting more together. You know, I'm gonna shout out Mommy Trader too. Look out for Mommy Trader. But listen, we're gonna all help you guys make money, okay? But let's start by downloading that app. I don't care if you got 2 other apps. Download that app also, right? Hey, we're gonna see you later. Listen, tomorrow morning I'm gonna be traveling, so I may not be able to get one video in, but we will see you the day after, all right? Live, love, laugh, and learn. Let's make some money.